Hello. Yes, good morning, everybody. I hope you can hear my voice and also see my screen clearly. Today is 5th of April. So today I'd like us to start off with the chart on our screen. We're going to start off with the Chef JPY. So basically on this chart we're looking for a possible buy. You can see the indicators I'm having on my screen. The lower one, this is green. At the same time, the price is somehow heading above the moving average, and sometimes it gets back below it. So on this chart, I'm looking for buy positions. I'm going to explain why I'm looking for a buy position. So the first thing I'm seeing here is I'm seeing a level, a very good trend line there. This is the trend line itself. And then I'm also seeing another one from the top here. So we have a resistance here, we have a support, we have a support, and then we have a resistance, we have a resistance, and then we have a support somewhere here, then we had a support here. Some reasons can break below this level. If the price can go below this level here, then that would mean we are now looking for sell positions. We expect sellers to push price down at least up to this support. We had a support here, very good support. We had a support. If the price breaks below this trend line as it is doing right now, then this will give us an ideal place to continue looking for sell positions from. We expect that sell to take us down at least up to this point here. So on the other side, if the price breaks above this trend line, the upper one, then that would mean we are now expecting price to extend itself much higher. It should go up and even break above this level before continuing to the upper side. The next instrument, the next one which we'll be looking at is the SP500. So you remember what I keep saying on this symbol? I keep mentioning that you're supposed to be looking for buy positions. This chart is still very much to the buyer side. We have a very good resistance there. We have a very good resistance level. We have a resistance, we have a resistance, and then we have another level here. We have another one there, and then we have also another level there. So technically, if we were to be very, very conservative, then we would be waiting for price to either clearly break above this high here so that it can continue upwards, or we would wait for price to come back down and touch this level so that we pick a buy position from that point, or we'd be waiting for price to continue down and go up to this level here before it extends to the upper side. So ideally on this chart we are bullish. Sorry about that. So we have another level here. This is like a very good resistance level. It's also significant. If the price can come back to it, then it may act as a good place to look for a position from. So that is horizontal. These are the levels we are looking at. But if you just want to draw some other shapes on this chart that are very useful, that were useful in the past and may likely occur in the future, then we want to do that now. So we'll have that, and then we'll have that, then we'll have another one, like that, and then we'll have another one like that. That shape doesn't look very good, but still a shape. And then we have another one like this, and then we have another one So basically, those are some of the few areas that was significant in the past. So I'm not saying you should use them now, because there are things which have already happened. If a similar thing happens in the future, then you'd want to trade based on the one which is happening in the future. So you may see a contracting wedge formation, you may see an expanding wedge formation, you may see a triangular formation, or you may see a rectangular formation in the future. So if any of them happens, then you're supposed to be looking at for a trade based on the one which is relevant, not what I've drawn currently. So the next instrument I want us to look at is gold. So gold, so far you can see clearly that we are in a range. The range runs like this. We have a level there, and then you have another level at the top. So you can see that for the past almost 2 weeks now, the price entered into this range, and we are still somehow inside it. So if the price can break beyond this line here, that would be a sign that now we are continuing to the upper side. We'll be expecting buyers to continue to push price to the upper side, at least up to this level here. On the lower side, if the price breaks below the lower range, then we do expect sellers to continue to push price. We expect a break below this line here. So that line is 1885.35. If the price goes and closes below it, then the next line is this one. This is 1846.78. So basically, if the price touches this level here, we'll be looking for a buy. If the price touches this level here, we'll be looking for a sell. If the price breaks beyond these upper two lines, we'll expect buyers to continue to push price to the upper side, at least up to around 2054.72. On the lower side, we have this level and also this level here. So based on the indicator we are having, this one here, you can see clearly that we are upwards. Therefore, a move to the upper side is likely, and even a break above this level is likely, at least up to this point here. So the next symbol is Gbp Usd. So the Gbp Usd, so far as it is now, we are biased based on this indicator, but I won't recommend you look for buy positions. I'm going to explain why you should not look for buy positions at the moment. So I'll add the Zigzag Indicator. Just a second. Where is it? Have it here. So I've added the Zigzag Indicator on my screen. The settings for this one is default. I'm using the default settings. So you can see from this point we had a swing high here. The price went down, it formed some low, then it came back up. This high here is lower than the previous high. It continued down, it formed some low, then pulled back to this point. It formed a high which is lower than the previous high. Then for the first time it went up, forming a high which is higher than the previous one. Then for some reasons it has formed a low which is now lower than even the previous low before we had this breakout here. So this could be a sign that most likely the price is heading to the seller side. We are likely sellers despite the fact that this indicator is showing us a buy. So we have a shape here. We have a shape there. We have a shape at that point. It is actually an expanding wedge formation. So if the price should break below this shape, if the price extends and breaks below this shape, then that will be a sign that we are now heading to the lower side. We actually expect price to break below this level. This is 1.29924. If the price breaks below this trend line, then we expect it to break even lower, expecting price to extend much lower. So the next instrument, the next place which was significant in the past is this one. This one here. And then we had like a converging wedge formation here. So the reason I've used the zigzag indicator is not only because I want to use it to explain this chart, but it's because you can also use it in the future just to form your own strategy. It's very, very important that if you can use it, ensure you use it, because it can give you some of the best signals out there. Like, let me explain this from this point here. So we had a resistance here, we had a resistance somewhere here, and then we had a support here, we had a support there, and we had a support here. Then for some reasons here, the price broke above it, continued upwards before coming back, and then closing somewhere here. Then it extended even higher. So basically, when the price goes above a shape like this in a zigzag formation, this is always a sign that we are likely to continue in that direction. So when the price was breaking above this level here, you're supposed to have taken a buy position somewhere there, had your stop loss here, and then your take profit can be 2 times or just whatever you see fit to have your take profit, but your stop loss should be below this level here. So you'll buy it, hold on to that position, expect buyers to continue pushing price up. If the price pulls back down, forms this shape here, also buy when the price breaks out of that shape. So like in this case, we could have taken a sell somewhere here, our stop loss was there, then the price goes down, comes back up. When it breaks above this level, we close that sell which we had, we pick a buy position, our stop loss is now somewhere there. So that takes the price up. It consolidates somewhere here. This one here was enough to make us hit our take profit. Then if it breaks below this low, we also pick a sell position. We have our stop loss above the high of this high here, and then the take profit is like 2 times. The same thing we're now waiting to do here. So if the price breaks below this trend line here, we'll be looking for a sell. First of all, we expect that sell to push price down at least below this level here. Does that make sense, whatever I'm saying? It should make a lot of sense, because based on the zigzag alone, you can create a very, very good strategy that has very, very small risk. The next instrument is Euro USD. So Euro USD, so far we are also bearish. We are sellers. But we do expect that sell to end soon. So the first thing I'm seeing is we have a very good support somewhere there. We have a resistance. It was a support in the past, so it can still act as a good resistance there. And then we have another resistance there. Then we have a level there, like that. And then we have a shape like that. We have a shape there, and then we have another one there. So you can see when I draw it like this, it appears to make some sense, because if you remember what I just mentioned on the chart we just looked at, I said that if a shape like this forms, you're supposed to wait for price to break out of that shape, and then you pick a position, which means when the price broke below this shape here, somewhere here, you could have taken a sell. Our stop loss is somewhere there. Our take profit in this case is this low here. The same way, when the price breaks below this low, we'll pick that sell. You can still just sell it. You can sell it still, but have your take profit here, and then have your stop loss at the high of this candle here. So this is the best way to look at this chart. This is a very good sell. If you sell it where the price is now, have your stop loss above this high, and then have your take profit somewhere there. And the next symbol is the US dollar Japanese yen. We have it there. So with the US dollar Japanese yen, so far we have seen price continue to the upper side. We had a very good bullish momentum here. We have a resistance there, we have a support there, and then we have a resistance. This is a very good level. It should act as a support in the future. And then we have a support there. So those are horizontal, those are the levels we're looking at. But the shapes that we have on this chart is this one. This is like a contracting wedge formation. So it was a bad case because you can see that the price broke below it. The price broke below it somewhere here. At the same time, it went and broke above it. So you could have taken one loss, but eventually the price could have gone your way. We have another shape, this one. We have another shape there. Doesn't look very good, but still it's a shape, so we can't disregard it. We have another one there. And then we have another shape somewhere there. So the idea is to trade when the price breaks out of that shape, you enter a trade in the direction of the breakout. So if you have like a converging wedge formation and then the price breaks above that converging wedge formation, you pick a buy position. If the price breaks below the converging wedge formation, then that will be a sign that we are now sellers. So you pick a sell position, expecting sellers to continue to push price even lower. The next instrument is Brent oil. So the Brent oil so far, I want us to look at it from the 30 minutes time frame. So we have a very good resistance level somewhere there. This is the first resistance which stands out. We have another one here. And then we have another one there. Then we have another one. This is just a level which looks significant. So it's not just it looks significant, it's actually significant because the price reversed from it. So other than those levels, we have some shapes also. We have this one, the lower one. Have the lower one. And then we have that one. So technically, as it is now, we actually expect price to continue to the upper side. We're looking forward for the buyers to continue to push price upwards, at least up to this resistance level here. So we expect that where the price is now, if it's to go down, we expect it to come back down up to somewhere around this area here. This is 105.916. If the price can come back to somewhere here, then this will give us an ideal place to look for a buy position from. We are expecting buyers to push price upwards with our first target here. The next target is this one, and then the last target is the one we have at the very top. So that is my opinion on the charts which I've just looked at. If you have any questions, please feel free to post them for me on the chat so that I'm able to respond to them as fast as possible. And if you have a chart which you want me to look at other than the ones which I've just looked at, then I do recommend that you do also send them as a comment so that I can look at them tomorrow. So something else, if you have if you have a strategy which you think we can look at to see if it's viable, then you can also mention that on the comment so that I look at it live as we are talking, so that we see if it's something which you may want to use for trading or you may want to develop it further. So thank you very much. See you again tomorrow at the same time. Thank you.